Hey, what's good? Complex mind, simple man, coming to you with another thinking out loud. Okay, so we had a pretty good discussion just recently, Friday night, on Marlon's special that he dropped. Okay, so if you haven't seen it, make sure you go check out Radical Truth to Power and take a look at the videos. You'll really enjoy them. Make sure you leave a comment, like, share, and subscribe. Um, dynamite discussion. We had a good time. But one of the things towards the end, as I'm prone to do, I got into one of my rants and I was talking about basically how we regular people, right? If you're not a regular person, then this may not be the video for you, okay? But for us regular folks, the ones who go to work every day, or we're having to manage whatever income we have that comes in, and it's just barely enough, right? You're not living this excess largesse life, right? We were talking about, well, we got onto the subject of talking about like banking, right? How do you structure your accounts and how do you, navigate in this system? And I mean, I spent almost 20 years of my working life in insurance and in banking. And I'm like, man, maybe I should share a few of my opinions, a few of my thoughts, things that I'm thinking about, but do it out loud. Yeah, I know that's lame, but still, yeah, still. So what I did here is I put together a real quick, short introduction presentation where I'm going to talk to you about just the basics of finance, but we're going to focus on banking. Okay. Now, in this one, I might not get into some of the detail that I really want to get into. It may flow better if I have one of my friends on with me, or maybe I just need to do a follow-up installment. It'd be great if you would let me know. If you don't let me know, because sometimes you don't let me know, I'll figure it out and I'll do something anyway. It's just might not be quite what you're looking for. So that's why I really would appreciate that feedback from you. And from those of you who do comment, man, appreciate you so much. Share the content, get it out to your people. But no further delay. Let's go ahead and kind of get into it. So once again, what we're going to be coming at is just talking about as a working person, or a person who you might be on retirement income, you may be on disability income, but whatever it is, you have kind of like a finite amount of money and you have to be able to negotiate life. Okay, so what I'm going to touch on is the introductory part, like I said before, just kind of getting it started. And we'll move from there into more complex things as we go along. Now, what you have in front of you here is just the basic financial pyramid according to my opinion. Okay, so again, I'm going to stress my opinion. Yes, I am licensed and experienced in various aspects of the financial services industry. I am not presently in any role of sales or production, as we say. Just sharing with you some of the things I know and see if maybe it'll help you out a little bit. So when you look at my pyramid here, it's how I stair-step walking people through building a successful financial foundation. And I think it's good to have an image because we oftentimes will allow ourselves to get ahead of the ball. We will think of things like, wow, I need to invest in the stock market. I need to start a business. I really got to increase my savings. I got to get my savings in place, right? But if you're not doing things with a plan and you're not being intentional, what often happens is you're skipping steps. And each of these steps, they can take a while or they can go quickly depending upon your financial maneuverability, your behaviors. And, sometimes we have good behaviors, sometimes we have bad behaviors. Some people are savers, some people are spenders. For a saver, a lot of this may be pretty easy. For a spender like me, I like to eat. It takes discipline and it takes focus. It means you got to come back to the plan periodically. But for a saver, you're not off the hook either. If you don't have a plan, you're just pushing money away somewhere. And one, you may be missing out on life. And two, you're putting the money somewhere that is not most beneficial for what you are actually hoping to accomplish. Okay? Because if you're saving the wrong way, you're really not adequately prepared for the adverse event that you're concerned about. Okay? So, at the foundation, once again, I'm going to say this pretty often, my opinion, okay? And you know, this glare may be kind of throwing folks off. So here you get my natural, beautiful face. So when we talk about your foundation, like at the bottom of it all, and you talk to different financial professionals, they're going to have different opinions about how this order works, okay? I believe that these things are very tailored. That's why I'm talking to just anybody who's going to pick up this video. So that's why this is very kind of open, okay? This is just one person's opinion of how to visualize this thing that we all manage and deal with. So for me, I say the basis, the bottom part has got to be your transactional account. Now, some people, because of circumstance, bad behavior, whatever it may be, are unbankable. If you're not familiar with that term, it just basically means that you've got some bad history with banks and you're probably on the check systems program, and the banks won't let you have a checking account. Okay? So you would have to adjust a little bit. You may have to look at some virtual options. You may have to look at like these prepaid cards that go on. But there's still things you can do. Okay? But the main thing is find out what it takes to get off of whatever list is keeping you from having a bank account, because you need one. It saves you money and is more convenient than having to hold cash or throw away your hard-earned money on check cash services, because they're just robbing you. All right, so that's your foundation. Next one up, I'm moving through this one pretty quick because we're going to be talking about banking today. Next one up, life insurance. I am a firm believer that life insurance has to be a foundational part of your financial plan, because it does not matter what you're trying to build if you don't get there. So if you have, I'm going to say, like in my case, wife, 3 kids, house, cars, right? Got things that I'm responsible for. Now, I am trying to build a business. I am trying to build out this platform. I am trying to get into some investment opportunities down the road here. All of these things are so that I can have more assets, more wealth, okay? Not just more income, right? Income's a small part of the picture. Wealth is the bigger part. So you got to get assets to accumulate wealth, okay? Now, let's say my goal, just to pick a number, is to have $1 million in net wealth, okay? So net wealth, for those who are not familiar, that's we take out anything I owe and we say what's left, and what's left is at least $1 million. That's what I want to build for my family. And I have a 10-year plan to get there. Here's what life insurance does. Life insurance, in a way, hear me, okay? Life insurance is basically renting the money that you're trying to accumulate. You're renting the wealth that you're trying to build, okay? So I have a 10-year plan. What happens if I die a year in, 2 years in, 3 years in? What happens if, because all things are not unto death, what happens if I'm seriously injured and I can't work anymore and I have to rely on disability or what have you, right? That can seriously impact my ability to get to that $1 million worth of asset value in 10 years. Life insurance says, look here, I will rent you that $1 million for a monthly payment, right? And if you don't live long enough to see it, or in the case of a disability policy, you are significantly injured to the point you can't, I will replace your income to whatever agreed amount. That's another discussion. We'll talk about it another time. But life insurance is how you set that money aside, because here's what happens. Let's say that you do pass away, car accident, walking down the street. We got these crazy people walking around shooting people because they're having a bad day. So many things can take you up out of here beyond your natural life expectancy. Life insurance says if any of those things happen, you rented $1 million from me. So I now have to give $1 million to your loved one, your beneficiary. That beneficiary will get $1 million tax free. Did you hear me? Tax free. So the thing that you're working on your 10-year plan to achieve gets interrupted 4 years in, you're guaranteeing your family that that $1 million still happens. So unfortunately, you won't be there to help live with that $1 million, but you have just changed the entire trajectory of your family because you were working to do that anyway. That's what your mission was. And your mission got interrupted, but you still paid off. You still came through. That's how life insurance. Now, next one up, personal savings and emergency funds. Some people will say, well, Theus, why didn't you put that after the checking account, right? I'm paying my bills. I need to save money. I need an emergency fund. What if I lose my job? What if? Agreed. You may want to switch those two positions. I don't. Okay? I say that first, I need the checking account. I need the transactional account because that's how I live every day. That's how I buy food. That's how I pay bills. That's how I function. Okay? Gotta have it. Gotta have it. I'm not interested in giving people fees to give me my money that they didn't help me work for. Not interested. Then I put life insurance next because it's a big allocation of funds for everything else that I'm building here in this pyramid. Like everything else that we're gonna talk about, life insurance is saying, yeah, add all that up. I got you. Okay. Your savings account, your emergency account. This is so that you can survive a hit to your income, or a large expense, or a significant expense, or an unexpected expense, without having to liquidate anything above it. That's the big point here. That's why I put this here. You don't liquidate life insurance. I mean, there's cases where you have like whole life policies and variable policies, things like that. It's more intricate. But generally speaking, you get life insurance for the cash benefit in the event of death. Okay? So if you lose your job, not really liquidating your life insurance, especially if you have term insurance. There's no liquidation to be done here. Okay? But get your emergency fund next. This is where you get, numbers can change, depends on who you talk to. 3 months is like a common number, right? You want to save money up to 3 months of your personal income. I personally, outside of people who really earn a lot of money, I don't know a lot of people who have that. And I like to make things attainable. Okay? So personal savings emergency fund, I would say, depends on your lifestyle. Depends on what you got going on. Step one, I would say, how much is your car insurance deductible if you have one? If you have a car insurance deductible, you need to make sure that your emergency fund is equal or greater than that deductible. That's step one. Step two, do you have a home? Are you renting? You should have homeowners or renters insurance. So what's your deductible there? Now, add that. We got to keep pushing, right? We want to make sure that if I have a car accident, I can get my car fixed because I need my car fixed so I can go back to work. See how this works together here. So you got a $500 deductible, make sure you got $500 in savings. You got a $1,000 deductible, make sure you got $1,000 in savings, right? For those types of weird one-offs that your other insurance is going to kick in to help you with. Now, beyond that, you got a vacation you want to do? How much is that? How much will it take? Start saving towards that. This is going in your emergency fund. All right. How much would it take for me to be able to function for 30 days with no pay? So what's your monthly income? Just 1 month. Add that on there. Got to get there too. In fact, I'll place that way ahead of the vacation thing. I just thought that because it came to my head. But Emergency fund is for those types of things, so that you're going along, you're paying your bills, you're doing the things you need to do. Oh, dang, you got hit with COVID. Oh, man, it turned into long COVID. Oh, your job doesn't give you short-term disability. Okay, there's no more money coming in. I got to stay home because I can't go to work, get everybody else sick, plus make myself worse. Can't do that. Need to sit still. I need to make sure that I can still pay my bills for 2 to 4 weeks. Okay? I know you're with me, so I'm going to move on. Personal credit. I put this in, it's a different color code because now we're starting to move into things that are important to have, but they're not critical to your existence. Okay? So personal credit comes next because you don't want to be overly cash heavy. You just don't, because cash sitting still doesn't make any money. Cash needs to be moving into assets and moving into things that actually can generate wealth for you or minimize an expense for you. But personal credit can be dangerous if you don't have everything below it in place. If you have everything else below it in place, you don't have to worry about running your credit card up because everything's taken care of. Your emergency fund will cushion you from anything that your credit would have to touch. But life does happen, and you may find I need to be able to get to something quickly. I have $2,000 in my personal savings, but a tree fell on my house, and no, because you got insurance for that. You should have insurance for that. But something comes up, whatever it is, you got to help a family member, and that depletes, that would deplete $2,000 out of your $3,000 savings account. That can be a little rough. Might be one of those times where you want to go ahead, put that on your credit card, and then assess each of the things below that, looking at your emergency fund and your transactional account, and see, okay, now how much do I want to pull out of my emergency savings for this unexpected expense, right? So that way I don't have to touch more of my credit than necessary, because there's interest, that's lost money, right? So you touch that, but it's that safety barrier, right? Having a line of credit, a home equity line of credit on your home that you never touch is like having money always sitting there waiting for you. It's the credit card that's waiting for you, and it's got a better rate than your credit card's going to do, and it's not meant for a credit card, so you don't use it like that. It's just for an emergency. But now you've just bolstered your emergency fund with somebody else's money. Don't carry a balance. There's no reason to carry a balance because you have everything else below it taken care of. 401k, SEP IRA, right? If you're working for a job and they offer you a 401k or a 403b, take it. It's the least you could do. Put some money in there for yourself later on. It's really important to do that. Now, it's not a panacea. It's not gonna make you rich. What it's gonna do is make your retirement less painful. So do that. SEP IRA, that's for your self-employed people. That's your version. Do it. You need it. You owe it to yourself. Do it. But this is gravy, okay? It's important. It makes everything else taste right. But if you jump to your retirement planning and your life insurance isn't there, your checking account is a mess, you're always running over, you owe people money, you got personal debts on your credit card, you don't have an emergency savings, that money isn't going to help you, because what you're going to do with your 401k is you're going to go in there and you're going to borrow against it. So you're stealing from your older self. And then your older self won't have the ability to go and pick up a second job. Your older self won't have the ability to go and, drive Uber or Lyft or whatever they do. The older self can't do that as easily. Not like you can, right? So don't steal from yourself. Just don't. And then what everybody wants to do, what everybody's so excited about, stocks, real estate, starting a business, crypto, whatever. These are very important. These are ways you build wealth. Good, important things to do. Make sure you have everything else in line first. As if not, you're building on sand. First major thing that comes up, you're going to be selling your stocks. You're going to be pulling out of an investment because you can't maintain your responsibility. You're going to be pulling into your credit, so now you're in a spiral. You're going to be depleting your emergency fund, so as soon as you can't go to work for a week or two, you're completely messed up. You're going to cancel your life insurance because you don't have enough money to support all the other things above it. And your checking account is going to be a hot mess. Many of you, many of us, many people are already kind of in what I'm talking about or have experienced it. There's no shame in that. You just got to learn from it, rebound from it, make a plan, and move. Now, I did a lot more talking there than I expected to, but my intention is to follow up this video with like really kind of going into each of those on their own merits, because today we're going to talk about banking on its own merits, and that is not going to be a really long discussion because this is an introduction. But when you think of banking, there's generally three main types. You got your traditional bank, right? We all know about those. You got your credit unions. You may be familiar with those, but you don't really know much about them. And then you have your virtual banks. Ooh, a lot of people think those are scary because I need to see where my money goes. Let's just be real. When you go inside of Wells or Chase or whoever, you don't see where your money goes. It's all an electronic transaction. The only manifestation of your money that you see inside that bank is when the teller counts the cash out and gives it to you. And now you got cash. Well, it's hard to pay for anything with cash anymore. So now you got to convert that too. So, I got my opinions. I got my thoughts. But here are some of the basics, okay? What's a bank? Banks, we already know generally what a bank is, but they're owned by their investors, shareholders, or private families and individuals, okay? And then you got credit unions. They're owned by their members. So when you sign up with a credit union, you are part of the ownership of that credit union. And so it's designed to help make you getting access to things like lending and better interest rates easier, because you're part of the family, so to speak. And then you have your virtual banks, which can be a credit union. It could be a traditional bank, but they're virtual. All right, these are like your Capital Ones, your Discover. There's others out there, but there's nowhere for you to walk into, right? Even if you wanted to, you ain't getting in. Okay, they got a corporate office somewhere, but there's no banking services offered at the office. Okay. Then what do all of them do? They all do basically the same thing. Loans, deposits, withdrawals, ACH, and wire transfers. If you're not familiar with those, because those are terms that we do bump into more often than you may think, but we don't really recognize them for what they are. ACH, automated clearinghouse. That is when you're paying a bill, but like, let's say you buy something online and they don't want your debit card. They want your routing number and your account number. That's an ACH. When you get direct deposit to your checking account, even if you're on like one of these card accounts, what do they tell you? Don't give me your card number. I need the routing number and the account number. That's an ACH. Okay. Then you have wire transfers. You're probably more familiar with those when it comes to, like, if you're buying a home, you generally will move the money by wire transfer because it's a large sum. And you could also use it for like international transactions. So that way, because everybody's not using a routing number, account number once you go overseas. So they need something that's more user friendly for international purposes, which is going to usually be your SWIFT codes, right? So that's a way of moving money electronically. ACHs are not guaranteed. Wire transfers are guaranteed. Whole nother discussion. Not going into that because you don't need that for what we're talking about. Debit cards, ATM cards, difference between those. I don't really think there's a lot of ATM cards out there anymore. But debit card has a little Visa or MasterCard or Discover logo on it. ATM card generally doesn't have any kind of logo on it. It just has whatever the bank name is, because all you can do is use it to get cash. Credit cards, you know what a credit card is. Online banking, that's just how you can interface with your account remotely. Money orders and cashier's checks. These are forms of guaranteed funds. In brief, guaranteed funds just means that the bank or the institution is saying that I'm vouching for these funds. And in fact, you're really using my money. I'm trusting them to give me their money. Okay? Takes you out of it, takes that personal part out of it, so other institutions and companies can feel more confident that they will get paid, right? You pay your landlord with a money order because your landlord now knows that I'm getting paid actually by insert bank names checking account. I'm not getting paid by your checking account. Okay? So those are the basics. What's the big difference? Traditional banking, right? And this is your JP Morgans, and it's also your, Wells Fargo's, Bank of America's. It's also your credit unions, okay? They typically offer lower savings interest rates. Yeah, all right. I haven't looked at them in a while because I've walked away from traditional banking personally, but usually the savings interest rate is somewhere around 0.003%. So you might get a penny a month for a regular person. If you got a lot more money, then you're still not making any money on interest. You might get 0.005 or 0.01 percent, but on large numbers, it's still passive income. Okay. You got in-person banking, so you get your teller, your banker, that nice experience of walking into the storefront, because that's all the traditional bank is. You're walking into a storefront and everyone's there to help you depending upon what your need is. So if you just need some cash or you need to make a deposit, you can go to the teller and they'll assist you with that personally. If you need to open an account or you need to apply for a loan or you just have questions, then you can go to see a banker. If you are looking at rolling over your 401k from a prior employer and you need to get that into, a traditional IRA, or you're ready to start a Roth IRA or whatever that is, or whatever it is that you're needing, you want to do actual stock investments, you got that kind of money and you're ready to move on that, they got an advisor there. And then you have, the branch manager who will be there, and that's good for complaints, fees, things like that, right? So it's just a storefront, okay? Guaranteed funds are talked about, physical locations, plus you also get everything the virtual will give you, because you get your phone support and you get your online support. So what's virtual banking? Virtual banking, you're usually going to get a little bit higher interest rate. It's still going to be largely negligible in my opinion, but it will be better, right? They might offer you 1%. They might offer you 5% on your checking or savings balance, which is way bigger than someone giving you 0.003%, okay? But if you don't have a lot of money, 0.003% giving you a guaranteed 1 cent and 5% giving you 1 cent, it's still 1 cent. So if you are moving check to check, paycheck to paycheck, or just a little bit over each time that you can move to savings, really, I need you to really think twice about being overly concerned about what interest rate they're paying you. Because if you don't have a lot of money and it's not sitting still for at least 30 days, because they're going to be looking at your average account balance, you're not making anything anyway. So now it's really about focus, and it's about how does it serve you. And that's what I think you really need to look at when you're talking about your banking accounts. Virtual banking, all services are remote, all the same services as above, but you're not going to have a person sitting in front of you basically reading to you, right? They'll talk to you, they'll answer your questions, they'll do everything that anybody else would do. They're not going to be able to just count cash to you, because that's not, you can't do that virtually. So you don't have tellers, you have customer service representatives. And no physical location, so you're not walking in anywhere. When you do need cash, you use ATM. Depending upon the institution, you may be able to even make deposits at the ATM. So you can still get cash to them in those cases, right? Now, my virtual banking situation, I can't deposit cash. That's a definite downside for me. If it mattered, which it doesn't, because I never have cash. If I have cash, I'm probably setting it aside so that I can use it at my convenience anyway. So I don't need to put it in the bank. All right. So that's that. Right. And then now I'm just going to run my mouth a little bit. All right. So please read the disclosure because blah, 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 booty, booty, boo, hotty, ha, and make decisions that work best for you. Right. So when we talk about structuring a checking account, which is going to be the next video, not even structuring a checking account, structuring your personal banking, what I would like for you to take into consideration is how do you bank? Not how do you want to bank, not how you should bank. Okay, everything starts with where you are, and then you build to where you're trying to go. Okay, have the dream and then reverse engineer it to come back to helping you. So if you're a person who feels more comfortable going into a banking institution when you need to, traditional banking is probably best for you. If you're a person who goes to the bank on a regular basis, traditional banking is probably better for you. If you're someone that doesn't remember the last time you went in your bank, you're already banking virtual. So now, are you getting any benefit from that traditional banking structure? And you have to look at that. If it's not costing you anything, you got a free checking account, you're not paying any fees to anybody, everything works just fine, and then you have the ability to walk in and get things done when you need to, then that's the perfect situation because you're able to do everything. If you're someone like myself, I can't remember, legit, I do not go to the bank. But I have 20 years of history to know how to navigate my accounts. So don't need to go inside. So for me, there's 6 of one, half dozen of the other. It's not about the interest rates for me because I ain't got enough money for that to really matter yet. It's really just a matter of this is easy. I get what I need and I work. So for me, I like virtual banking. For you, you may like traditional banking, and that's perfectly cool. What I want to get into next is how do you avoid paying fees to these institutions? What are some of the pitfalls you need to be aware of? And how, regardless of if you're doing traditional or virtual, how do you structure things to get the most out of your relationship? How are you paying your bills? Are you still writing checks? Are you? Do you use your online bill pay? What's the turnaround time for that? How does that actually work? Does the money come out immediately? Does it get held for you so that you think it's been taken out immediately? Or does it just kind of sit around for a while and then one day it all falls out your account and you forgot it happened? Gotta know how yours works. So we'll talk about that next time. But like I said, hey, if you like this video, if you got anything good from it, please let me know. This is just me thinking out loud. I hope you have a great rest of your day. And I'll see you later.